Hey everyone, welcome back to Corporate Decoder, the place where we take apart corporate filings like their Lego sets and see what's really going on. Today we are diving into a Form 8K filing from Aditxt Inc. It might sound like a boring document, but trust me, there's some interesting stuff happening with a subsidiary and some convertible preferred stock that could be worth $1 million if certain conditions are met. Basically, Aditxt has a subsidiary called Pesanta, and Pesanta just bought some patents and intellectual property, things like inventions and ideas from some holders. To pay for these assets, Pesanta didn't use cash. Instead, they gave the holders something called Series B convertible, preferred stock. Think of it like a special type of stock that can change into regular stock later on. Now, this Pesanta preferred stock is interesting. It's set up so that it automatically turns into 1,000 shares of Pesanta's common stock, which is the regular stock if Pesanta ever does a big initial public offering or IPO. An IPO is when a company offers shares to the public for the first time. There's a catch if when Pesanta's common stock is priced for the IPO, the preferred stock isn't worth $1 million, then the conversion ratio, how many common shares you get for each preferred share, will be adjusted. The people who got the preferred stock are supposed to get $1 million in value from the IPO. A scroll copy of TAFTA press release is furnished to this current report on Form 8K as Exhibit 99.1 scroll. Aditxt also put out a press release about this acquisition, which is included as an exhibit in this filing. Scroll cautionary language regarding forward-looking statements, scroll 4. There's also a warning about forward-looking statements. These are statements about the future, and the company is saying that things might not go as planned because there are risks and uncertainties. They point out that investors should check out their annual report to see all the possible risks. The filing includes exhibits with the press release as Exhibit 99.1. Now let's step back and think about what this all means. Aditxt, through its subsidiary Pesanta, is acquiring assets, but instead of paying with cash, they are using preferred stock that converts into common stock if Pesanta goes public with an IPO. This is a way to get the assets without spending money right now. One thing to consider is why Aditxt is using stock instead of cash. It could be that they don't have enough cash on hand or they want to preserve their cash for other purposes. It's also worth noting that the value of the preferred stock is tied to the success of a future Pesanta IPO. If the IPO doesn't go well, the holders of the preferred stock could end up with a smaller piece of the pie. Another thing to keep in mind is that Aditxt is warning investors that there are risks involved. This is a standard disclaimer, but it's a reminder that things don't always go as planned in the business world. Overall, this filing suggests that Aditxt is looking for ways to grow and expand its business, even if it means using creative financing methods. Whether this strategy will pay off in the long run remains to be seen, and investors will need to keep a close eye on Aditxt and Pesanta to see how things develop. So what's my take on Aditxt after digging through this filing? The big question here is whether Pesanta can successfully launch an IPO. If they can, those preferred shares become quite valuable. However, the company is using its stock in place of cash, which could mean that they have very little cash, which could mean that they have very little cash yet. Ultimately, whether Aditxt is a worthwhile investment depends on your risk tolerance and belief in the company's long-term prospects. The potential upside is significant, but so are the risks. Thanks for watching. If you found this breakdown helpful, hit that like button, leave a comment and subscribe for more corporate deep dives